This is a daily chart of the NASDAQ. You could see on Friday that it traded through its 10 EMA and up to its 21 EMA, and still it's well below the 50 and the 200 simple moving averages. You could see on Friday there it is 9.8% below the 200 and 2.8% below the 50. You can see it's been below the 200 since January 18th of 2022. So it's spent nearly an entire year below the 200 simple moving average. It's only done that a few times in its history. But if we take a look at a 30-minute chart, you can kind of see that it's been in this trade range here for nearly a month. And I would say that 10.8 area here, a little bit above 10.8, and then 10.2. So there's about a 600-point range here that's just been chopping around. Yeah, we had a great day on Friday, but it's still range bound, and it could go either way. The S&P 500, same thing, range bound. You can see the range here. We'll call it 3950 at this level right here. And the low is about 3,800, I would call it. Yeah, it's traded below it a little bit, but so there's your trade range for roughly a month now. And the S&P on the daily traded up to its 50 simple moving average. It traded through the 10 and 21. It was stopped at the 50. So it needs to trade through that and through the 200. It certainly can. I mean, you want to keep an open mind, be flexible. The Dow Jones, a little stronger index. It rallied through its 50 simple moving average. It's above the moving averages here. You can see that golden cross. And one of the stocks that's driving this is Boeing, which had that golden cross as well here with the 50 crosses above the 200. You know, it's kind of a lagging indicator. Don't read too much into it, but it worked for Boeing for sure. You could see the consolidation, this cup here, and now it's just taken off and it's being supported by that 10 EMA. It's way extended now, but certainly showing strength. Another stock in the Dow is Merck that has just taken off, showing strength. And you know, what can you say about this one? Had this base here at 95.72. They reported earnings and traded, chopped around below 100 for a little bit, but once it crossed above 100, it has taken off and shown some real strength. Anyway, that's enough for those stocks and the indexes. We know that when, you know, Apple's down, you know, it's going to drive the NASDAQ, and the Q's down. Tesla has been down quite a bit. You know, it had bad news on Friday and still managed to reverse and rally. So that's something to take note of. Microsoft, you know, downgraded, you know, a little slowing in their cloud Azure, but, you know, maybe we'll see if it can bottom here around that 212, 213 area. You know, they got to stop going down on bad news before they can, you know, go up. The oil stocks, a lot of them have been, you know, sold. The exploration stock is definitely one group that has had a lot of trouble. There's Devon below the 200, Earthstone below the 200, Warren Buffett's, you know, Occidental now traded up to the 200 on Friday. So the exploration stocks look pretty bad. The integrated stock Chevron, it rallied up to its 50 on Friday. ExxonMobil rallied above its 50, so it's a little bit stronger than Chevron, and ConocoPhillips a little weaker than both of them. It's below its 50 simple moving average. So the integrateds are having a little more trouble here. It's 3%, 3.1% below the 50. The stocks that were doing well that have kind of faltered are the pipeline stocks, or Scorpio Tankers. See, it had this long run and now sliced its 50. And TRMD was another one. Torm sliced its 50. But the ones that I noticed the most was this oil and gas royalty trust is a leading sector for a long time. But you can see how it sold off here in the summertime, sold off again. And look at how long it took, like 3 months for it to rally from 9 to 12. And it sold off from 12 to 9 in like a week. So these things, you know, it's like a safe haven, pays huge dividends. This San Juan, it pays 17% dividend yield. But, you know, I think investors were hiding in these things. Permian Basin as well. and they just have sold off. Maybe I could see investors, taking profits here. They don't have to pay taxes for another 16 months, and maybe taking on more risk. Certainly the risk that they're not taking is in phase. This thing has sold off, sliced its 50, sliced its 200, and I don't know where the bleeding stops. It filled this gap here, but we'll see. First Solar has certainly held up better, but the solar stocks, they went from one of the top groups to 71 this week. So there's a lot of weakness there in that group. What is not weak is the drug stocks. I mentioned Merck earlier. So one of the leaders, Novo Nordisk, with their weight loss drug, doing really well. CPRX, a leading growth stock, trading, broke out here of this base, and it's just trading higher here. Made a new all-time high on Friday at $28.51. So that looks good as well. Neocrene, NBIX, another one. This has been on our watch list, and I like it as it pulled back to the 50 on lighter volume in the last 4 days. It's been climbing, so it's just kind of forming a base here, and definitely one to watch out for. DXCM, I'm going to put this in the drug. It's a diabetes play, but to me, it looks good here along the 50. As long as it can get supported by the 50, that is a strong stock. And INMD, I like this one because if you take a look at the weekly, you can see how much it's sold off. This looks a lot like CROX, and then it kind of formed this stage 1 base here. So if it can break out of this stage 1 base, it can be a pretty lucrative play once it breaks out. I like it above 40.29, but certainly, I would get in sooner, but that's me, not you. The retail stocks have done well. ELF, it's just been a beast. What bear market, right? 20 to 58, not bad. 6-month run there. CROX is another one. I mentioned it earlier. You could see the huge sell-off. They took on a lot of debt buying Hey Dude, but management has proven that was a smart move. It's earning more than $1 billion a year in annual revenue there. So it's getting some more love now. You could see its stage 1 base here. It broke out now, and this is what I'm talking about with INMD. If they can break out of these stage 1 bases and head into stage 2, this thing could run for a while. It's definitely got the fundamentals, and it's still relatively cheap here. I don't typically like PEs, but in a growth stock, this thing's earning $10 and it's at $110. It's a pretty cheap stock. So we'll see on earnings, when they report earnings in February, what they have to say about the Christmas season. DIX is another one that made an all-time high. I believe it's an all-time high. It might just be a 52-week high. No, it's a 52-week high on Friday here. This thing popped up to nearly 130. So it had this long period of consolidation and now is trading higher. So, and TJX is my last retail stock I'm going to go over. This thing is still, close enough to a buy point here at 81.17 in this little flat base pattern. That one still looks good to me. I want to take a look at some other stocks that kind of gapped up on earnings this week. This is the food stock, the French fry stock, they call it Lamb Weston, LW. And you can see that it was up on Thursday. I think it was, almost 10% with 246% above average daily volume. So that's a huge move. AEHR, they had 14.8 million in sales, but the stock went up, 32% with 518% above average daily volume. So you got to pay attention to that kind of action. On the week, it was up 13.5%. So definitely pay attention to AEHR. ACLS was another one we had on our watch list, and it broke out. Remember, then it pulled back to its moving average and now ran up again. It was up 6% Friday and 10% for the week. So it's kind of out of its buy zone, but definitely performing well. IRDM, Iridium, this is on our leader list, and it just broke out of a consolidation flat base period. Had a news, it had a news with Qualcomm, and so that drove the stock higher. OI, I'm not going to pretend that I know a lot about this one. Containers Packaging Group, very strong group, had this cup with handle, and this is a long handle. It's like a flat base, and then broke out last week. It was up 7%, then 8%. So, nice move in that one. Something to pay attention to. VIPS, VIP Shops. This is a China online discount retailer. And it had this pattern here, this cup pattern base on a bigger base, and then is running higher, supported by the 10 EMA. And it closed Friday 6.7% above its 10 EMA. So one last one to look at is ACGL. This one, you can see it pronounced gap up here, nearly 10% on 600% average daily volume, and now has traded along the 10 EMA. That's Arch Capital Group, an insurance property. I'm not going to pretend that I know a lot about this company. I just know they're going to earn $4 this year, $5.50, $5.50 next year, and is trading at nearly $64. So it's not an expensive stock. Anyway, that's it for this week. We never give up.